Hello student. In this video, we will solve sums based on modern approach to accounting. Classify the following accounts based on modern approach. Cash account is asset account. Cash at bank, asset account. Outstanding salaries, liability account. Sales revenue. Accrued interest, asset account. Leasehold property, asset account. Drawings, capital account. Discount received, revenue account. Bad debts written off, expense account. Purchases, expense account. Bad debts recovered, revenue. Plant and machinery, asset account. Capital is capital account. Interest paid, expense account. Bank overdraft, liability account. Prepaid rent, asset account. Carriage inwards, expense account. Goodwill, asset account. Rent received, revenue account. Rent received in advance, liability account. Next sum, let's apply the modern approach to a few sample transactions and decide which account to debit and which account to credit. Suresh started business with cash rupees 50,000. The accounts involved are cash account and capital account. Cash account is asset account. Capital account is capital account itself. Cash increases from the point of view of the business, and capital also increases from the point of view of the business. Increase in asset, we need to debit with 50,000, and increase in capital, we need to credit with 50,000 rupees. Purchased goods for cash rupees 10,000. This is a cash transaction. Whenever stock is involved, the following four accounts will be involved: purchases, sales, purchase return, and sales return. In this case, purchases account is involved. We will involve the purchase account and cash account. Purchase account is an expense account. Cash account is an asset account. Expense of purchases increases when you purchase goods. The cash goes out, the cash reduces. So we need to debit the purchase account with 10,000 rupees and credit the cash account because there's decrease in cash with 10,000 rupees. Sold goods for cash rupees 15,000. Again, stock is involved. So in this case, it's sales. The two accounts involved are, it's a cash transaction. So the two accounts involved are cash account and sales account. Cash account is an asset account. Sales account is revenue account. There's an increase in asset and there is an increase in revenue also, sales. So cash account will be debited with 15,000 rupees and sales account will be credited with 15,000 rupees. Received interest from Manoj in cash rupees 500. nominal account is involved, we need to take the name of the nominal expense account. In this case, Manoj's account will be ignored. So the accounts involved are cash account and interest account. Cash account is asset account. Interest account is revenue account. There's an increase in asset and there's an increase in revenue. So I will debit cash account with 500 rupees and I will credit interest account with 500 rupees. Sold goods to Samir rupees 6,000. This is a credit transaction, a credit sale. So the debtors account Samir will come into the picture. So the two accounts are Samir account and sales account. Samir is a debtor. Debtor is asset account. Sales is revenue account. There's an increase in debtor asset and there is an increase in sales revenue. So Samir's account needs to be debited with 6,000 rupees and sales account needs to be credited because it's increased with 6,000 rupees. Purchased furniture for cash rupees 5,000. The two accounts involved are furniture and cash. Furniture is an asset account. Cash is also an asset account. Furniture is purchased, so there's an increase in furniture. Cash goes out, so there's a decrease in cash account. So we will debit furniture with 5,000 rupees and we will credit cash asset because cash is decreasing with 5,000 rupees. Paid wages 20,000 rupees. Again, it's a nominal account. So the accounts involved are wages and cash. Wages is an expense account. Cash is an asset account. There is an increase in expense and there's a decrease in the cash asset account. So wages will be debited with 20,000 rupees and cash will be credited with 20,000 rupees. So we saw a few sample transactions and how to decide whether which account has to be credited or debited depending upon the modern approach to accounting.